Thanks very much, guys. And, we were just talking about this with KV Subramanian. What does this mean now as far as the monetary policy is concerned? We've got one coming up in another few days. What kind of room does this make available to the MPC?
I think I would say ample. Primarily two considerations. One, of course, the global environment. And this is something that we discuss in the fund very regularly. If we look at the overall inflation trend, globally it's been coming down. And that will prompt monetary easing by several other central banks. I think the Fed and ECB should be this year, lowering interest rates. Together with the very judicious policy mix that has been adopted in this budget, with a strong fiscal consolidation, which I actually think will be stronger than what has been announced, given the very conservative assumptions. That leaves ample space for, monetary policy to loosen. And my sense, I was hearing some of the discussion on the banking stocks expanding. My stance is that, the yield curve, with the risk-free yield curve coming down, and then that will mean lower cost of capital for a lot of borrowers, which should increase the supply of, bank lending. And that might be the part that is actually getting reflected in the banking stock. But overall, I think just to reiterate what I said, JNV, which is, it's a judicious budget, it's a non-populist budget, and it's a visionary budget.
Well, the MPC will meet, so we will have to wait to see what is delivered. But the governor, in his conversation with me just a few days ago, made it very clear that there is no question of acting on a rate cut just at this point in time.
May not be immediately, but later.
Yeah, sure. Sunil, Vachani, many thanks for joining us.
Thank you,
the budget came early for you because the cut in tariffs from 15% to 10% came a day ahead of the budget. But overall, on balance, what do you believe this does now in terms of consumption, in terms of demand?
Yeah, I think first talking about the steps which were announced yesterday, a day before the budget, I think the finance minister has sent a very clear signal that when it comes to manufacturing for the world, India is the place to be. And I think just to explain what these duty cuts actually mean to the industry, I think they're very significant because first what they do is that they improve the competitiveness of the Indian industry as far as manufacturing for the domestic market is concerned. Two, I think these duty cuts will also help expand the market for mobile phones because obviously these duty cuts will be passed on to the consumers. Yeah. And I think they're quite significant. So I think definitely it'll give a huge boost to the mobile phone industry in terms of consumption. And we've seen that the market has not been really growing in the last couple of years. So I think this is a very positive step. And I would say this also helps in our global competitiveness because even though the philosophy, the policy is that we will not export our duties and taxes, but eventually when the custom duties are high, and the tier 2 and the tier 3 suppliers do not get a refund of these duties, we end up exporting these taxes and duties. So the lower duty structure would also mean better competitiveness in the global markets.
Well, yes, that certainly is the hope. But, in terms of private capex now, there were, of course, allocations, etc., made for semiconductors and so on and so forth. But given where you find yourself in terms of demand visibility and now to push the export story, including the domestic story, capex at this point in time, would you need to put in any fresh money?
Yeah. So, Shereen, I think if you look at the Make in India policy, I would call it Make in India 1.0. I think it's been very, very successful in our industry, which is the ICT industry. And the numbers definitely speak for themselves. If you look at the total consumption of ICT products, which includes, mobile phones, laptops, and all appliances and TVs, the total demand is about $130 billion. And it's probably for the first time that almost $100 billion worth of goods, of ICT goods, were manufactured in India. So I think now what is
demand, you think?
Is a domestic demand, $130 billion. Out of that, 100 billion was manufactured in India. The first level of manufacturing was done in India. And now I think what we need is a very strong and robust component ecosystem to make this sustainable. So I think as an industry and as a company, I think we would see now CapEx coming in into the component side of it, and also definitely the semiconductor. But of course, the first step would be the ATMP, and of course.
So what are we talking about? Ballpark capex numbers?
Are you talking about Dixon as
Dixon
such?
specifically,
I
yes.
think if you look at the last couple of years, it's been around 350 crores. This year we'll end up probably at around 500 crores. And I think next year will definitely depend on the projects, some of the projects that we're working on, which I won't be able to talk about right now. But I think if we leave that aside, I think the numbers will be similar, around 500 crores.
Well, on that note, we are going to have to listen in to what the Prime Minister said there on the budget speech that's been delivered by Nirmala Sitharaman, her 6th budget. We've got a packed house here at the CII. Gentlemen, I have to say, Nirmala Sitharaman, speaking to you at CII, had made it clear this is going to be a vote on account. She's delivered on that. Perhaps one of the first few finance ministers really sticking to the script on what a vote on account is and what a vote on account should be. Dinesh?
Yes, totally agree. As you said, it was on our event where she mentioned this. I think she has walked the talk. But equally so, she has given the direction in terms of what it's going to be. So I think that's great.
Oh, absolutely. She made it very clear we're coming back for the next 5 years. So that pitch was made. But Rajiv Memani, nothing for you to do today. No changes as far as direct or indirect taxes are concerned. But, we were discussing the fiscal conservatism, and that was the point that you were making as well.
Yeah. So just to answer on your first point, I think this is a budget of a very confident government, both politically and economically. So no big softies announced or everything. Just a very good articulation of what they've achieved, or what they've done over the last 10 years. And then a broader vision of what they intend to do going forward. And even if I look at the macroeconomic thing, all of us have been covering and seeing the tax growth. Direct tax growth of almost more than 20%, indirect tax growth of 11, actually GST growth of 11.5%. So everyone was estimating that the revenue, the tax growth this year will be higher than budgeted, and the expenditure will also be higher than the budgeted.
It's actually lower, a little bit lower.
Both of them are slightly lower. So my guess is when we eventually end up, and the gross number and the net number. So I'm assuming they are doing a lot of refunds will be given in the next few months. And next year, what they've assumed is that the gross tax revenues will be 11.5% growth and the net tax revenues will be 12% growth. So, I mean, we are threading, but I think overall just a lot of conservatism, or I would say realism, built in the numbers. So there's enough cushion. We are living in a world which is volatile, uncertain. So there's enough cushion that's built in. And they've always delivered in the last 3 years on the numbers that they've said. So this 5.8% to 5.1, my presumption is maybe lower than 5.8%, the budget, but coming down to 5.1%, I think that's really great. Yeah,
that was the point that KV Subramanian was making as well, that the 5.8 number is likely to be lower as well. But this point about delivering on the numbers, and that's a valid comment coming in there from Rajiv Memani.
In fact, actually, an aspect that I want to highlight is that, even if you look at the previous vote on account, 2019, many people reckoned that the PM Kisan was a populist scheme. At that time I actually had said as well that it will bring in investment, and as I've said, research by Pulak Ghosh has demonstrated that. Yeah. So the theme that I want to say is that this government actually has shown judiciousness, not profligacy in an election year, even previously. So this is consistent with its theme. It's not different at all compared to, and I think that reflects the overall, and having had the privilege to work very closely with both the Honorable Prime Minister and the Honorable Finance Minister, this reflects their themes. They actually think about, about running the economy well, and handing it over to the next government, which quite likely is going to be them, but is still handing the baton over in a very judicious manner. So the non-populist part and the judicious visionary. I will emphasize once again the R&D part. I think not too many people have paid that much attention, but I think that is a very important stem which ties in with the equivalent of the National Science Foundation that was actually announced in the 2019 budget, and I think steps have been taken to action that. When you put the two together, I think that can be a big big idea really in the budget.
Innovation fund.
Yes,
the innovation
1 lakh crore actually, and that's 50-year money. So
interest-free 50 years is
in fact, see, having some of my early research was on innovation, and gestation periods are long, so 50 years actually, but not 50 years. So that's a very large, very, very important step.
Yeah, CB?
No, I think, again, it's a prudent budget. I would think it's prudent because of the fiscal, what we talked about, the borrowing part of it, and I think that really puts in a lot of ease into both the real and the nominal interest rates, I would think that's going to be very critical. And I really like the texture of the spending in terms of, while we can talk about that capital expenditures, I mean, that could have been more.
We needed Vinayak back, because Vinayak had said here on CNBC TV18 that 13.5 lakh crores will be the number, but of course it is lower than that. You know, still, if you look at it over the previous year as well, it is a significant growth.
It's a significant growth, number one. And number two, if you really look at the way it has been balanced over physical infrastructure and the social infrastructure, and really going into the rural housing and rural infrastructure, I think that's very, very critical and important.
Well, let me also invite Sanjiv Puri to join us here at our CII budget headquarters. Sanjiv, many thanks for joining us. As you take your seat, from a consumption point of view, from an FMCG perspective, what do you believe the budget has delivered? He's sitting. No time to sit. No time to sit.
That's as usual.
Hit the ground running.
So you see, consumption, of course, is an outcome of the manner in which the economy progresses. It's one facet of it. And what we have seen is consistency of vision and strategy, and really laying down the roadmap for execution. That's what we've seen in the budget, and the whole focus is on creating productive deployment of resources. And with all that is being done, for example, in certain agriculture sectors, in the housing sector, in the rural, and I'm sure the public capex also will find its way, its fair share, more than its fair share in rural. You know, there's also the support to the state that is coming in as far as infrastructure. That also has a footprint in rural. So I think all of that over time should enable or strengthen the virtuous cycle, so that we start getting uptick in consumption.
You know, on consumption, Sanjiv, is there concern, because the expectation was that at least in the hands of the farmer, in the hands of the rural economy, that disposable income would perhaps be enhanced by way of additional sweeteners. That has not been the case. Even PM Kisan, which was widely expected to be enhanced, has not happened. So what does that mean then as far as volume growth is concerned? I mean, are we to contend with a volume growth of 2 to 4%? Is that what we should continue to budget in?
You see, look, as the economy progresses, it's a matter of time when consumption will pick up. So I do not see any reason to believe that is going to be the trend. It's a matter of time when it will pick up. See, whilst you may find that direct money may not have been specifically called out, but there are many avenues that will create productive utilization of the human capital in rural areas, that will pump in resources into the rural areas. I think once agriculture gets competitive, incomes will improve. The fact that you are having Lakpati Didis, that will have a footprint in agriculture. There are a lot of them actually can become village level entrepreneurs to support agriculture. Rural housing will create employment. So all of that is potential. Even when you expand the coverage of healthcare, ultimately the discretionary or the incomes in the rural end also go for health. If you kind of provide it in another fashion, then the rest of the money is available. So I think the deployment of resources in rural has been done in a more productive fashion, following the themes of the prior years. So over time, I'm sure it will lead to an uptick in consumption.
Yeah, you want to make
I just want to actually bring out, if we look at overall the rural economy, the fact that the spending on Manrega has declined, because we know very well Manrega is demand-based, and it's higher when it's distressed, when the rural economy is distressed. The fact that is not happening is actually symptomatic of the fact that the rural economy is doing fine. One more aspect, and I think which is something that I think economists need to pay far more attention. I mentioned it earlier too. If you look at the participation rate of women, that has increased by almost 15 percentage points in the rural areas, and that is in a space of just 5 years, 15 percentage from about 25 something to 40. I think that's phenomenal, and the reason it has happened is because now women have more time from the productivity. They actually need less time to cook. They don't need to go as far to actually bring water, etc. And that is also, reflective of the strength of the rural economy. So I think what the government is basically seeing is that there is no need for, as such, at this point in time, an additional impetus, given all the PM Awas Yojana, the Manrega, all these actually that are already working well.
Yeah, no, I just wanted to add 2 points to what has been discussed here. So if you look at this government, I think from even during COVID and post, their focus has been on making sure the spending is for productivity increase and inclusive growth. So rather than actually put money into the hands of the consumer, they have made sure that the consumer or the society becomes more productive, thereby getting more money. So if I look at the two other aspects to whatever we spoke about, one is the focus on MSMEs and especially their transition for both sustainability and also the making sure that they can transition properly into the digital growth. So if I look at these 4-5 pillars coming together, then I think going back to Sanjiv's point, it will have a trickle-down effect to both the rural and the economy to aid consumption.
If I could just add one more very important point, a very innovative step being taken, this whole facet of incentivizing reform at the state. Now, you see, that can unlock the potential of agriculture also. That's similarly, there are other reforms that in fact are awaiting last mile execution and very progressive reforms. So I think that also will unlock the potential of the economy, and that's, I think, a very, very positive development.
So I think one other area which we should really focus on, especially when it's coming with the global challenges and where we talk about SME and Indian manufacturing, is the focus on both technology and R&D and green manufacturing. And I think that's going to be very critical. And the fund type of when we are talking about a 50-year fund and encouraging even the small scale to transition to a green, I think that will be very, very critical for when we look at a very strong, robust, connect with the global supply chain.
No, so gentlemen, at the end of this now, let's talk about private capex. Sanjiv, let me start by asking you, what should we expect now in terms of private capex? We've been talking about incipient signs for a while now. Are we likely to see private capex picking up?
So I think it's already starting to pick up. The situation on the ground as far as domestic is concerned is fine. The global situation is very weak. So we have a little bit of a mixed bag, but capacity utilizations are up. I think all the macros favor investment because there is liquidity, balance sheets are good, health of financial sector is good, corporate income tax have been rationalized some time back. So I think all the enablers are in place and it is already starting to pick up. Things related to infrastructure, cement, chemicals, pharmaceuticals, the industry that I come from, multiple industries, we are seeing investment. Tourism is seeing a lot of investment from hotels. Real estate is seeing a lot of investments, right? So it is already starting to happen. It could have been faster if the global situation was better. But I think as we move ahead, this will only... I think the finance minister also today acknowledged that in the speech.
Every time you say that the capital outlay, the capex has been increased in the budget, but when will private sector? Today you had the acknowledgement of the private sector already started doing that.
But I would say even the strong capital markets. I mean, India has had the largest number of listings. And I think so the capital provision also that's required, the confidence that's required, a lot of that has gone to pare down debt. So I feel pretty confident that the investments will happen, and I think it will be led obviously in the existing sectors, but this entire energy transition that's happening, whether it's electrons or green electrons, green molecules, I think that's going to be the big bucks where the big...
But the 15% sunset extension, that hasn't come through, and we didn't hear her say anything on FAME specifically, though she did talk about electric mobility.
So I think that I would say amongst everything, if you have to pick up one thing which I was expecting, which would happen, hasn't happened. They have extended for sovereign wealth funds, they've extended for GIFT, IFSC and others. So all those things they have done. But I think this one is one area where we were all anticipating that they would do, given the lift that's happening in manufacturing, which is not happening. Just I think two data points here. I wouldn't actually call the private capex, incipient, because if you look at the data, capex by corporates, and this was, the CEA's report showed that it increased by 28% in, FY22, 23% in FY23, and 10% in the first half of the year. So, that is demonstrative of, capex coming. And one more, with some caveat on the, on the deflator. If you look at the gross fixed capital formation to GDP in real terms, not in nominal terms, that is touching 35%, which is also a good sign. The other third indicator which I would actually mention is if you look at non-food credit, take personal loans out of that, that is increasing at 13%. And I think that is for sure would be going into private capital expenditure. My sense is that, whatever uncertainty there is, actually, corporates are waiting for the elections. And here I would want to mention, this is a sort of a clarion call to the corporates, to not look at the global situation that much. India has clearly shown, in a global economy which is struggling to grow at 2.5%, Indian economy is growing at 7%. So why should the corporates wait and watch for global economy? Go and, invest in the capex now.
Go and invest in capex now. Forget about what's happening in the world.
Yeah.
You've got enough working for you here as far as domestic demand is concerned. Rajiv Memani, from what we've heard now and the journey to June or July, whenever we see the final budget, what would the expectation be?
No, I think people will look at the March numbers. I think most of us feel they'll do better in March. Like the RE is always better than BE, and the RE2 is always better than the RE1. So I think the numbers will be better. So hopefully they'll have more fiscal space, and if they can address and work on some of the issues which don't have a budgetary impact but will have an impact in terms of ease of doing business, ease of paying taxes, which the government has done a great job of. I think that'll be great, and continue to invest in technology. One of the reasons why personal tax collections have gone down is the number of people who get SMSs between 15th March to 31st March saying that your ASI data or your data is showing X, your return is showing Y, do you want to revise your assessments, or have you fully filed this, are you fully, in end of December, end of March. And I think if they continue to do the analytics, continue to invest in technology behind it, they've assumed 12%, but I'm hoping that the actual revenue collection is even higher, giving them more space to extend and spend more on the capex side.
Speaking of capex, and again, ladies and gentlemen, our reporters are working the field, and this is a story that my colleague Sapna Das has just broken. Remember, the OMC, the capex for oil marketing companies of 30,000 crore rupees, it has been revised lower, and it's been deferred to FY25. OMCs will raise funds after the 31st of March, so that's important as far as oil marketing companies are concerned. They will defer their fundraising plans to FY25. The interim budget has shifted the OMC capex to FY25, and OMCs have sought a lower capex of 15,368 crore rupees for FY24 versus the earlier budget aim of 30,000 crores. So that's as far as the oil marketing companies are concerned. And of course, lots of fine print coming in at this point in time. So, gentlemen, on balance, before I let you go, CB, I'll start by asking you, sixth budget. She's created history, the second finance minister after Morarji Desai to do so. How would you sum up Nirmala Sitharaman's sixer?
So I think it was a good success. It crossed the stadium, if I can say in a way. But more seriously, I think I like the prudence, the prudent approach, no shocks, the entire feeling of a predictability, both in the taxation front. That was very important. And I really liked, and I repeat, going back, when you talk about manufacturing, capex, what I like is the focus that India is doing today on, say, biomanufacturing, which came in, the focus on EVs, and therefore one sees newer avenues of the way we encourage green manufacturing, and that's going to be a very, very important trend which is coming out of the budget as I was looking at it. And I see definitely a lot now that would need to be done is to take it to the states, and I think lot of work there because the states have got a great opportunity being focused on agriculture, but it needs to be taken forward in a great way as far as states are concerned.
KV Subramanian.
As I said in my first words, I'll repeat that, JNV, judicious, non-populist, visionary, reflecting a confident, resurgent India.
Consistent, equitable, gives the right direction for the main budget.
Sanjiv?
I would go along with that, consistent and delivered on ticked all the boxes, and ticked all the important facets for building competitiveness, growth, also looked at inclusive growth, sustainability, and more importantly, again I will emphasize, has also touched upon the very important element of reform at the state. So all in all, an excellent budget.
Rajiv Memani, I'll give you the final say.
3 C's. Credible, consistent, confident.
3 C's. Credible, consistent, confident. We've got J and Y competing with the triple C. J&B
I must mention actually for the first time 3 C's are being used in a positive way.
That is true. That's true. Let's not go down that road. That's a whole other story. Gentlemen, appreciate you joining us here on CNBC TV18 at the budget headquarters. And of course, we will look forward to seeing you again later through the day. But Sonia, the markets at this point in time slightly lower. The story on the